get my free training underneath, like, share, comment, subscribe. So I've done that index. I'm going to move on to the Euro New Zealand now, as requested by Academy member. If you want to ask me questions about this privately, that Academy member in particular, do feel free to do that. I'll start off on your monthly. You can see what's happening is you fell, you're pushing straight back into these highs. There isn't an awful lot of proven rejection at this point because you've come away from it 3 times already and you're coming back for the 4th. Okay, so eventually you would expect it to break. That does still mean that, yes, ideally it's still short, but I would just be wary shorting it, because if you've seen it hit this high so many times so frequently, it does make you wonder whether you'll break through it. That pullback as well has taken you straight back up. So if you end up beating these highs, in other words, it's really not going to shock me whatsoever. And if you get back to where you were up here, it wouldn't shock me either. So any shorts, I would make them light, and I would really space them out just for now. I would only go for a second DCA up there and perhaps a light entry at this point. Going forward from that, if you do get above those highs and beyond, okay, I would again space things out a lot at that point, because you're going to be running into, oh, you have to go on your monthly for this. You'll be running into, if you see that candle wick, okay, you can see it spiked very high. So naturally, you've got a little bit of risk in the market. But really your job is to refer to price action levels up here. I would just say, generally, space your entries out a lot, maybe 1.9 at that point. It's going to be a long-term short entry, but you can see there's a lot of long bias down here pulling you up. So light short now, and then just trickle into the market as it goes higher. Don't bunch things up, really space it out. If I go on my, let's go the weekly for this. If you wanted to buy it, I would need a significant pullback, and ideally you want to come back to at least sort of your 40 MA. It would keep you in line with a strong uptrend. You can also see that there's various levels of key price rejection to the left-hand side. They'll give you a really good gauge for future price entries. So now absolutely is not the time to buy. You've had several weeks up. You've gone up and up and up and up. You're coming to areas of previous price rejection, albeit weak in my opinion. I think you've come back to it too quickly from where you saw here. That was very ideal for long entries, actually, that, because you can see there's various levels of price action there. Stock oscillators coming up. I should think that will trickle up slightly further like this, okay? And that's why it's short up here. But just do it lightly, because I think you'll come through that ultimately. But down here, you've got various levels of key price rejection. Stock oscillator, I think, if you do get to that point, is going to trickle down. You've got key price rejection, there's various levels of it. And within the overall uptrend, you can see on your weekly that has existed since March. Okay, so a long time, March 22, a year and a half, or however long, more than a year and a half, but it's shown you that overall uptrend trajectory. So that's where I would look long there. If you do get an extreme pullback, you could make your second entry, again spacing your trading out very, very wide. You could get a further entry nearer these key MAs down here, your 100, 200, and in line with various areas of price rejection to the left as well. So that would cause a real drop. But that would be in an extreme case, but I really like that as an ideal investor long. So I hope that makes sense on your Euro New Zealand. I'll save and repost that perhaps. Thanks for coming, guys. Don't